Good afternoon and welcome to the 3 o'clock hour of the afternoon update on Money FM 89.3. I'm Rachel Kelly.
And I'm Hong Bin Jiang.
And hello to all of you joining us again on social media. It's great to be back with you this Tuesday afternoon. I hope you're having a great start to the week. So far, we're almost halfway there. Coming up on the show this hour, it is Tuesday, so our focus is Eco Money. We're going to bring you the latest in sustainability and finance. And you may have seen the news that broke this morning. The Monetary Authority of Singapore is going to pump money into a 5 million Singapore dollars Asia Climate Solutions Design grant to fund innovations in blended finance. What is blended finance, you might ask? We are going to find out from Sven Smit. He is a senior partner at McKinsey Company. He's going to be joining us in just a bit. Well, I say joining us in just a bit. We actually spoke to him earlier. So we're going to play you the best parts of that interview at 3:15. Hello to Justin, who's waving to us on social media. Thanks for joining us. We're going to go now and check in on the markets first with Hong Bin. Let's see where the STI is at.
Money FM 89.3. Financial updates from the Business Times.
The Straits Times Index starting off the day in the green, still quite strongly in the green, up 0.8% at 3,132 points. Advances heavily leading decliners today, 254 to 83 decliners. Taking a look at volume so far today, let's just give it a quick refresh. 619 million securities worth $608 million have changed hands so far. Hong Bin, you've been keeping a close eye on the markets and you've got a broker update for us from CGS-CIMB.
Yeah, so CGS-CIMB has lowered target prices for real estate companies, including PropNext and APAC Realty. And that's as it expects near-term market prospects to be dampened by the latest set of property cooling measures. And PropNext and APAC Realty's target price has been cut from $2.07 to $1.89, which is for PropNext. And for APAC Realty, it was from 84 cents to 77 cents. So both counters continue to be rated as add, and the cooling measures include raising the interest rate floor to total debt service ratio and mortgage service ratio, as well as a wait-out period of 15 months for private property owners buying non-subsidized housing board flats. And analyst Locke Mooney noted that the measures are likely to result in quieter market activity due to market sentiments being affected and potential buyers evaluating the impact of these changes on affordability.
So yesterday we spoke about telcos. We were talking telcos at the top of the 3 o'clock hour. We spoke about StarHub. We also spoke about Singtel, and you're watching Singtel again today. Tell us why.
So its Australian subsidiary Optus confirmed on Monday that the personal identification data of some 2.1 million current and former customers was leaked, and the company added that the media reports citing potential fines or costs from the data breach are speculative, and that is making its own assessment. So Singtel closed 2.3% lower at $2.60 after that latest update, and shares of Singtel are currently 0.4% lower at $2.59.
So I want to talk about a news release that broke at our inboxes earlier today from KPMG. They interviewed a number of Singapore CEOs, and they said that they're worried about the recession's impact on business growth. We've been covering that quite a bit on the station as well. And they also spoke about their concern when it comes to talent, but taking a longer term look at a 3-year horizon, they're a little bit more optimistic, aren't they, Hong Bin?
Yeah, they are. So CEOs globally anticipate a recession to hit in the next 12 months. And with 88% of them in Singapore having embarked on or already planning a hiring freeze. And that's found by the KPMG 2022 CEO Outlook. And there are other highlights in this report. 4 in 5 CEOs believe that recession is likely to impact up to 10% of their earnings over the next year. 72% of Singapore executives are confident in global economic economic growth over the next 3 years, as you just said. Top concerns for Singapore CEOs are reputational risk, which are about 20%, and economic pressures, about 16%. And about a third, about 32%, continue to struggle with telling a compelling ESG story, while 52% are mulling over whether to pause ESG efforts. And nearly half of CEOs, about 48%, say that they're prioritizing digital transformation at a rapid pace will be a critical in the war for talent.
And it's interesting, just to go back to that ESG topic, as we talk about that quite a bit on Eco Money. We've spoken to a number of analysts, and one of the questions that I've been asking them over the last few months is, once we start to see the pandemic, we see the end of the light when it comes to the pandemic, are we going to see ESG be put on the back burner? Because a lot of these ESG conversations came on the back of people wanting to build back better post-pandemic. And I wonder if these numbers perhaps signal that. I hope not, because we have been seeing momentum gaining ground when it comes to tackling issues such as climate change. And I hope that that momentum continues. But that 52% of the CEOs that are mulling whether to pause ESG efforts, that's quite concerning. So I think we're going to have to get somebody on next week to talk about what exactly that means and which direction ESG efforts are headed and at what speed. Okay. We've spoken about local stocks. We've spoken about CEOs' concerns. Let's head over to the U.S. now, because you picked up an article from Yahoo Finance on their top picks for October.
Well, for the week, this week, October,
this week.
Yeah,
okay,
October 3rd week. So basically the first stock that they highlighted was JP Morgan Chase & Co. And it's one of the biggest global banks with assets valued at $3.84 trillion and stockholders' equities worth $286.1 billion as of June 30th, 2022. And opening new branches, strategic buyouts and investments, and global expansion and digital efforts are likely to keep driving the company's financials. And further, higher interest rates and steady growth in loan demand are expected to result in a robust improvement in net interest income. And JP Morgan has been going through on-board acquisitions, both domestic and international. So JP Morgan has a solid balance sheet position and a solid capital deployment plan, and JP Morgan's trailing 12-month return on equity reflects its growth potential as well. So JP Morgan is on that list. Another one on the list is Ulta Beauty. And Ulta is a leading beauty retailer in the United States. And shares of Ulta Beauty have outpaced the industry in the past 6 months. So the company has been benefiting from its omni-channel strength. Also, the skincare category has been gaining from consumers' rising interest in self-care. And these upsides have aided first quarter fiscal 2022 results as well, wherein the top and bottom lines grew year over year and beat Zacks' consensus estimate. And results were backed by the strong execution of the company's strategies and solid guest demand, with the latter gaining from the company's exciting brand launches, and also increased in-person activities and travel have been leading to the revival of the beauty category demand. So that's another stock to watch in the U.S.
Thanks for that update, Hongbin Jung. There will have more market moves for you coming up after the 3:30 news on Money FM 89.3. Up next, we've got Eco Money. As I mentioned earlier on, we spoke with Sven Smit, who is a senior partner at McKinsey Company, to find out what exactly blended finance is. That conversation coming up next.
This is Money FM 89.3, Singapore's most influential radio station.
Sustainability and finance. Now, the Monetary Authority of Singapore has pledged 5 million Singapore dollars, or to contribute to 5 million Singapore dollars for an Asia Climate Solutions grant. This is part of a push to move closer to net zero carbon emissions by 2050. What exactly does this mean? And when we're looking at the wider picture, what's the role of public-private partnership? Well, this grant was announced today on the back of the inaugural Transition Finance Towards Net Zero conference. McKinsey Company were partners in the event. To find out more, we're joined now by Sven Smit, who is a senior partner at McKinsey Company. Sven, thank you so much for taking the time to speak with us today.
Thank you to be with you. It's great to be here.
Great to have you with us. So, Sven, perhaps we can start off there. I want to find out from you, what does net zero mean to you?
Net zero is our effort to transition not just the energy system, but also agriculture, mobility, and chemicals to a place where we will not get to a situation where temperatures will rise out of control with negative effects on all of us.
So let's talk then and take it a step further. Why is public-private partnership so important here?
Well, to some degree, you could explain blended finance and public-private partnerships with the fact that the environment and the climate are a public good. And some of the investments that are required are either getting returns all the way past 2050, or the returns are not just directly at the same level that businesses and private institutions would expect to make in their discipline by capital markets. And so what you would want to achieve with blended finance is that the combination of public interest and the public good of environment gets blended into the finance of private companies so that the returns to them look profitable. Well, you might say, could the public then not just do the climate investments themselves? And we all know that the privates are probably more productive and efficient to do certain things. So you want to get the blend of the productivity and the efficiency of the private sector, but you do want the financial commitment of the public sector to the private sector that they will find it a reasonable return to do these efforts.
Sven, let's just take a step back here and take a deeper dive into exactly what we mean by blended finance, because for many this may be a new term.
Yeah, so maybe a very pragmatic example that was shared also in the discussion today. You could have a company that would want to invest to set up in a certain place. And that company would invest, let's say, $500 million. But they won't come because the cost of the energy that they need to do is prohibitive. And they go to a place that doesn't have that energy cost. If you would then give a grant of, let's say, 10, 20 million that ameliorates the energy transition cost in that thing, the entire investment might come. So with actually a small amount of money, you could catalyze a much larger investment, which is good for the people, good for the region where it happens, good for the place where it happens. And at the same time, it achieves the public objective of a cleaner environment.
So I want you to actually talk to us about, the size of the challenge as well and the potential for blended finance to unlock.
Yeah, so we've done many, many numbers on this for the world, but also for Asia. So if I take the Asian number, the step up in annual spending to invest in the new system of energy and production that will make all of this possible is something like 2.4 trillion. That's a lot.
It is a lot, 2.4 trillion.
A year.
Wow.
Every year until 2050. So it's a lot of money.
Okay.
What we discussed today is that it might be possible by financing 300 billion in a public way, you unleash something like 900 billion in a private way, which would be going, not halfway, but a significant way, 40% of the way towards that 2.4 trillion. Lots of other things will need to happen still. But what it suggests is that a smaller public investment catalyzing a larger private investment could be a very substantial part of the solution to that large step up.
Sven, talk to us. Who was involved in the discussions today? And then from there, what does this mean for the man in the street?
Well, I think business was involved, the financial system from all sides, banks, but also regulators and monetary authorities were involved, NGOs were involved, experts in the field of public-private partnerships, experts in the field of the energy system, and so on. So let's say the people that could figure out how to do this. What it hopefully would mean for the people in the street is that we do achieve the objective of being resilient against climate change, but at the same time do it in an affordable way, and so that the people in the street will not get, in a way, penalized for the transition by exorbitant energy costs, for example.
So what was the aim of the event and what's next?
Any targets?
I think there was a lot of learning going on. like what works in public-private partnerships, what doesn't work yet. There was sharing of examples that had worked, and there were also discussions about barriers that are still to overcome. I think there was a call for blending this approach more into the regulatory system. There was a call for very specific projects that could illustrate this, and there was a strong call that this will be part of the COP27 discussion in Egypt.
Can you give us some example of those projects that were perhaps discussed?
So I think it ranges from the standard things of wind, solar, and so on, but also people brought in that we need to also work on food and we need to work on the chemical system and so on, because food has its impacts too, and affordable food, good food, and environmentally clean food is important for us all too. So I think the spectrum was quite wide, which is consistent with what this challenge is. Of course, mobility was another part of the discussion.
And what about barriers? You mentioned barriers, Sven. What needs to happen for these barriers to break for us to reach net zero?
Well, overall, it's a speed question. What was illustrated is that of that 2.4 trillion, we could get there, but we are not there. We're behind in the investment, and we're behind even in the target setting. So that is not a lack of commitment. I'm just saying we're behind. And many of the barriers have to do with how easy it is to do some of these projects, how fast you can move them forward, who wants, not in my backyard is a big problem in this whole transition, which has to do with the domestic policies. And then the other barriers is to unleash the finance. And, are the institutions that are helping to finance the public-private partnerships currently set up and governed in a way that they will put the majority of their money in projects consistent with these goals? And I think largely this was also a call to action to go further from targets to implementation. I think the implementation roadmaps are not 100% clear, but there's many things that you could do that already make sense, and they're not yet happening. So there's a big call to action also.
And I like what you highlighted there, not in my backyard, with climate change, that there has been a lot of passing the buck, hasn't there, when it comes to tackling issues related to climate change and reaching these net zero goals. So what do you expect to happen next, Sven?
I expect is, I would say that because and which was also discussed today, we are of course in a complicated environment in the global economy and so on, that we will get to a level of pragmatism which will suggest this is what we can do in the next 5 years, and that becomes a real roadmap. Because I think at the moment the full roadmap to 2050 is probably a bit overwhelming. And I think we would help society a lot if we would just pick out the stuff that is the most doable and get on with it, so that you get a positive record of action that then can accelerate and also drive innovation that will make the next set of action easier again.
So what is Mackenzie's role here then?
We were in this conference, we were a knowledge partner. I would say in general, we do two things. We are contributing knowledge. I chair our McKinsey Global Institute, which is our think tank. And we, for example, had a report on net zero that basically described the size of the challenge, where it sits, who would have to do what to make the transition possible. So that I would call a contribution in knowledge. Of course, McKinsey Company also works with clients to get some of this work done. Which is, working with manufacturing companies to make their factories cleaner and more sustainable, working with food companies on food and so on. And I could go on, but there's the two sides. The impact is through our client work largely, but we contribute a lot on knowledge so that many decision makers are better informed on the decisions that they need to take.
Okay, Sven, well, thank you so much for taking the time to speak with us today.
Thank you, and it was great to be with you. Have a good day.
Thank you so much. We've been speaking with Sven Smit, who is a senior partner at McKinsey and Company, hot on the heels of the inaugural Transition Finance Towards Net Zero conference. You are listening to Money FM 89.3. Thank you again for joining us today on Facebook, YouTube, and LinkedIn. For those of you joining in on social media, we will be back with you on social media tomorrow from 3 p.m. And Wednesday's issue is, of course, your health. We are going to be speaking with Dr. Leong Ho Nam from the Rofi Clinic. We're going to be talking about HFMD. Yes, those 4 letters familiar to many parents. I'm talking about hand, foot, and mouth disease and what you need to know. he's going to tell us. So stay tuned on Money FM 89.3. Don't forget, you can catch the highlights of this conversation on our Facebook page. All our videos are up there. We'll also have them on audio. That's AWEDIO.
Money FM 89.3. Money FM 89.3.